Hello guys, glad to have you on board again. Today we're going to take care of some intraday purposes. We try to cover like the SPX and probably highlighting the intraday areas for the Bitcoin just for some educational purposes. Obviously, we're not talking about swing, so let's get straight into it. We do use the usual path in here as we may have to have a look at the cash market structure prior to anything, so we can highlight potential open gap that may attract prices. That is the case right now. We do have an open gap from, oh sorry, I'm 4-hour chart, but still. Alright, so no daily open gap. Yesterday we gapped down but closed lower than the previous day's lows, so we do have a negative current impact on the market prices, but no pricing structure requiring us to get down to. All the gaps are just natural gaps. We've got this one, which is a rejection gap, so in which we terminated the bearish move and initiated a bullish one. So as long as this one holds on, we're still facing a little bit of bullishness, but obviously we are desperately searching to get there. That's what I think is the market current motive, getting to this area and trying to break below. So that is what we're going to follow. So a bearish structure right now with a bearish momentum on the daily charts, probably about to push toward divergence, which means we're probably going to try making new lows without making a new low on momentum. So we'll see about that. Anyway, today we'll have a neutral bearish bias. That's what we need to figure out of the daily charts. Then we get to the 1-hour chart time frame. We figure out the major boundaries. All right, so these are swing boundaries in which we do not trade on the opposite direction. That would be this one. So we said neutral bearish, so anytime we get to the resistant context is definitely where we're going to start selling. So this is the area where we do selling only. All right, no buying in here, or unless scalping entries, like if you want to scalp to get to execute the big orders that might be pending in these areas. That's all we want to be doing. Normally we maintain bearishness, so we target breaking below the support context. So today's objectives and targets would be there to profit take. So we get in here, we profit take, no questions asked. We're not swing trading, we're just highlighting the technical areas today. So we're standing like usually when we don't have any major trend setting itself ongoing right now. We do set ourselves right in between the two areas to start the caching structure. So we're probably going to start today in here, and it's a binary options. Either we go there, find some bears, and we're probably going to try rebouncing to the bullish area. Option number 2, we go straight forward for the bullish area, see if we can find some bulls, and if we don't, we can eventually break down this area. All right. So the purpose will be getting in here, see if we see some bulls. If there are not, then we're going to go lower. Here we profit take no matter what, and we'll eventually try to push it further below the previous low. That's all we can deal with today as bearish, neutral bearish option. That doesn't mean we're going to go straight bearish. We could definitely go to the resistant area first. In order to trade, we don't trade in H1 context, we trade 15 minutes and 3 minutes depending on what context it seems to be the most reliable right now, and to me it will be, I think, 15 minutes definitely being the most attractive one. So we've got 15-minute area to trade in here today, like getting in there, trying to figure out a bearish entry, probably overlapping to this area would kind of make sense to me, or we just go straightforward bearish without questioning anything in this current motive. So the technical areas will be simply in here, get to the resistant context, got a moving average that is reversing to bearish. So this area is where we get our first intraday area to look forward for 15-minute signals. All right, so this is a 15-minute context signal area we could get in here. I think there are no areas but the support area in the 15 minutes. This is previous support, so we could search for potential areas to trade in here, potential signals, but not signals to enter bullish. Most likely in here signals to profit take as a bear or risk manage. But like we said, we're neutral bearish, so I wouldn't nearly call the market out of support areas. Most likely try to buy below and after the market broke those areas down. So this is definitely where I think things can be a little bit more interesting in a 15-minute context. Now if we were trying to get 3 minutes to be a little bit more aggressive, then in here we can definitely feel the bearish orientation. All right, big breakout in here. We broke down, target broken through, market trending, both contexts being unfolded. So this is where we trigger the trend. So trend, divergence, pullback, this would be a final excess. So in a 3-minute context, we would have to be contrarian, which means we would like to buy this market for some retracements. So normally and technically speaking in here, everything suggests a little bit of bullishness at the open, getting to the resistance we've highlighted. Searching for a 15-minute signal seems to be the most reliable thing to do, as this current motive seems to be pretty much overstated or over. All right, so not necessarily as the breakout has been in here. So yeah, I would see breakout, divergence, pullback, and we're making final excess right now. So in this area, yes, I would say today's cluster definitely stand on. 3-minute time frame chart is over, and there's nothing left to do. There's a potential 15-minute signal to trigger in here, and if it doesn't, then wait for the red area. And of course a 15-minute signal must be as well a 1-hour chart signal confirmed as well later on. So you can 15-minute trade in here, but it's going to be aggressive, right? This is the 1-hour chart area. So remember how to deal with. If you go 15-minute signaling into a 1-hour chart area, means you're experienced and aggressive profile. If you're not, then if you break the 15-minute area, you just say, all right, for today we might be doing some swing purposes. We're trying to build a support in here, so wait for an H1 signal in this area or above. All right, it's simple as that. So 15-minute in here. If it doesn't work out, wait for a 1-hour signal in here. If it works, then target the blue area and make your risk management in the current 28-40 area probably. If you want to be more efficient, use the order book to figure out where the supply and demands area are when you reach out to those specific areas. I think the current bearish motive might probably be over and might be retracing to further to previous resistances. So probably the 15-minute chart context seems to be appropriate, with approximately 60%, 61% retracement seems to be what seems to be fair to me. So getting in here, ranging today, and hopefully getting a bearish move by the end of the day is all we could profit from. I wouldn't nearly say any other bearish entry to do right now. You could try a 3-minute one, actually. You could still try something else, sorry, in here. So it's a very, very tricky signal, but this is something you could do. Remember that normally in order to make the final excesses, we need to get below the support context. So we would have had a target in here. We should definitely have gone there. So there is probably a final, but this is definitely risky, final move to get to make new lows, probably for Wall Street open. But I think on stats dealt with, as you can see the support context have been moving in here. So I would say just dip a toe slightly below there and it will be a final trade. Those who want to buy actually could eventually do this. It's kind of trendy, so experienced traders only. But if you want to go down this road, then there could be a final move getting in here, just making a dip slightly below, getting to this area, and you get to buy in here to retrace to the 2900 or the 15-minute area. And afterwards, we're going to search for a bearish entry in here, bearish signal, 15-minute area in there. And if it gets to trigger, then you know what to deal with. Right, and we try to go lower. It's simple as that. That will be my goal for today. So you've got the swing areas in which you look out for signals. So now let's get to the efficient part of applying this strategy. How do you deal with that? So what I would do is I would put an alert in the 3-minute chart context. Come on. All right. So I would say I'd use framework on a trend final excess alert with bar close. So I would say 3 minutes trend final accessing, terminating today. All right, these are 3-minute signals, so I don't want these. What the hell? What's wrong with you? All right. Alright, so that will be my 3-minute signal alert. So I want to get there and at least before 7 p.m. Sorry, 5 p.m. And on a 15-minute context, what I'm looking forward for is a bearish range signal. So where the hell is this? Alright, so this will be framework, bearish range, alert, candle close. Same thing goes here. I want this to expire tomorrow or today. Oh, god damn it. So make it today, 23:57. All right. So that's it for my intraday session. I've basically done my job. There's nothing else I can do. Waiting for a potential final move in here in the 3-minute charts to eventually try a concentrated trade. Professionals only on this one, or experienced traders. Otherwise, you just wait for the 15-minute area. To look forward for a bearish range entry. I just remind you what the bearish range entries signals are. You need to be 61% retracement, so it will be there. And normally you can trade in context. So this will be the minimum price, 29.13, to try shorting this market. That's pure and simply all I have to tell you. Just showing up if I do have. So 29.13, yeah, it would bring us back to or close to yesterday open. So it will be retracing, finding some bears and closing at the lows. If we're ranging bearish, that would be the most probable scenario. That doesn't mean it's necessarily going to happen there, but as you know, things evolve. This is why the indicators plot new boxes as the things move on. So as for now, it seems to be the most probable scenario. Put your goddamn alert. If it goes according to the plan, then apply the plan, risk manage, do the job. If it doesn't go according to the plan, you readjust if necessary. Always remember that what you do trade is not what you feel, it's not what you think, is only what you can assess as being a tradable context. As like we said, probably bearish range, so I can assess my 15-minute bearish range context to be tradable. I've highlighted a potential trending move on the 3-minute chart. Could be with a final excess maturity, so this is a second trading opportunity, but that's all I can highlight today. Bearish range 15 minutes, final excess 3 minutes. This is all we can try to profit from. Let's have a look at the Bitcoin anyway, because I know some of you guys just care about cryptocurrencies only. So let's do the same job. Remember that we do care in here with the futures market, which is the one that gaps. So the future market has quite some number of gaps. We've got one in here out of 11,700 and another one still open below at 11,000, approximately 100. So how do we deal with this? All right, we go 1 hour. Oh, sorry, I might have gone a little bit too fast. We're gonna do this from scratch. What the hell? Oh yeah, okay. So 1 hour, remember that's how we deal with this thing. We need to figure out if there is a major context to this thing. I would say it's harsh because this would never have happened normally. Normally we should be ranging in here and we kind of reverse trending out of nowhere. So it feels odd to me, still feels, so this is the reason why I hardly can tell whatever the fuck is going to happen here. Either this is just a very ugly way of ranging and this is just an abnormal way of pricing it, and we were just overextending in here and we're just going to range again back to the support areas. Still feels like it is the most probable scenario to me, but we don't know. This could be an early trend breakout, and by doing this we would just be pullbacking in here to the previous market top, and if we find some support in here then we could have a final move. Remember, first wave, second wave overlapping, which could give us a final extended fifth wave, big bullish move, 17K or whatever, but something that the bulls would definitely like. So like I said, you need to pick one side of the road. Either you're bullish or bearish, you don't switch. I don't nearly give a shit which one you actually do want to trade. Just make sure you fit a context. I am fitting the bearish side so far, and I'm not changing. So all I'm looking forward for is for this thing, which is an hesitation structure, to be broken to the downside. All right, feeling like, all right, we got in here, we just failed to get to the support context, broke the resistant one, but at some point, if we fail in here and fuck up the support context, this would just be an ugly 4-hour range more than anything else. So we don't necessarily deal with it. All we can tell is that if we reverse in here, and if we fail on this signal, right, this is supposed to suggest we should be bullish extracting of this area, right? But if we don't, we're just going to go support area again and break it down. Those signals doesn't say 100% chances to go to the upside. It's just if you're bullish, then you're fine, and you're going to look out for bullish reinforcements close to the 60%. All right, so bulls are going to try buying this area of Fibonacci retracements. Okay, so it's okay for bulls. Anyway, 1 hour, we need to figure out a context. Like we said, we don't have any. It's pure indecision in here. So how do you deal with it? You have a look at higher time frame or lower time frame. Like we said, the 4-hour doesn't give us any more information. It's both bullish and bearish, but we're on resistant area, so we do nothing. Though we go 15 minutes, and I think this is where you get actually something to get to trade. That doesn't mean we'll actually trade, but in here you can definitely say, all right, I know what the hell this is. Just remove prices, all right? And normally, this is typically the kind of things I could give you on MCQ tests. And by the way, there will be no MCQ test on August. I'm sorry about that. Just don't have enough time to deal with it. So it will be resumed early September, obviously. Anyway, this is purely a range context. All right, we can easily figure this one out. All the range boundaries are 1, 2, 3, 4, and we're looking forward for the 5th one. We still haven't got to the resistant context, so lead me to believe that it is shortly about to come. All right, so we're looking for a 5th boundary, or maybe we've done this and we'll be dealing with the 6th boundary though. So it looks like a ranging structure, pretty mature, so normally in here we should be able to draw this signal in. This is what we think has been happening so far. We're going to have to confirm that. All right, so let's see what it is. Let's put the prices. All right, that's what we have. That's definitely what we have. We don't yet can confirm that we've built this range boundary. We could be, all right, this is a bearish range. We're breaking bottoms, we're breaking supports, and are breaking resistances. So this could be a range boundary in here. Obviously, I think we still have a little bit of gas to get to break the resistant context and build another boundary like in here. We're going to figure this one out. All right, so the range in here is tradable. It's a mature range. So what do? We build the goddamn trend lines I had earlier. All right, so this is what we're trading. This is what we're doing right now. We're getting this resistance trend line, and this is our support trend line. So support trend line is heading down, resistance trend line is going up. We do have something to trade. You're not trading something you wanted to see, you're trading something that goes along the context you identified. The context in here is a range. It's apparently a bearish range, as this is a wedge structure. So many people will tell you bearish wedge is a bullish extracting structure. No, it isn't. It's a 60 to 40% chances. So that's not something you can definitely use and trade blindly. So we don't know how we're going to extract this thing, and we can very well extract it to the downside, and it's been happening quite significant number of times as well. So don't be too bullish or bearish. We're ranging, so be neutral. I think that's the best case scenario on an intraday basis. We do have some gaps. Remember, one is in here. This is where we got a bearish gap. And this is where we've got the bullish gap. So what's happening? We've got a bearish wedge structure. Boundaries are both gaps. Top boundary is a gap. Bottom boundary is a gap. So you know where to trade. Do you really want to trade 50% of this? Consider this the bullish area. The bullish interesting tradable area is in here. The bearish interesting tradable area is in here. We're kind of sitting in between. So there's nothing you can deal with in here. All I would say is wait for a 15-minute context signal in here for a bearish potential entry. That would be bearish entry in here upon signal obviously. And in here, as you can see, we're trading the 1 hour context. So in here, I would say it's a 1 hour tradable zone. You don't trade this with 15-minute signal, or if you do, it's only because you're experienced and unprofessional. So beginners don't take aggressive trades. Remember that when you trade on the extreme channels, it says you're trading upon the higher time frame context. So in that perspective, instead of trading 15-minute, you get to trade 1 hour. All right, so the resistant 1 hour context is in here. So in here is a 15-minute area. I hope you do understand those things. If you're new to this channel or new to the indicators, it might sound a little bit complicated, but don't worry, you'll figure this out pretty soon. It's not that complicated. It's just a set of rules that you're applying each and every fucking day. And it gets like a routine. And when it is, then you'll see that those things, no matter how complicated they might have seemed at the first glimpse, they're definitely not complicated in the end. So what we do in here is just risk managing. All right, we're not forecasting what the market is going to be doing because we goddamn don't know. All we can do is highlighting areas in which reliable, low-risk things can happen. And then we wait for prices to test those areas. We see how they work this area out using the momentum signals that I'll provide. And if there is a favorable risk management in the area, you do trigger a trade. If we don't see any fucking thing to trade, then even if you're in the area, even if you want to press the button, you must not do it. We're supposed to risk manage, which means if you just want to trade, then trade whatever the fuck you want. You're just going to be like shifting or throwing a coin. That's exactly how it is. If you trade without risk management, you're not trading, you just want to press buttons, and that's exactly what you need to drive yourselves out of. I know that's what every beginner wants to be doing. That's how beginners think trading is, that the more you trade, the better you get, the more efficient you'll be, the more you risk, you spread the risk if you take multiple tiny trades. That's not how it goes. You want to be taking low risk trades with a decent risk management, but sometimes trading less means trading way better, and you really need to figure this one out. So today, out of cryptocurrencies, that's all I could say. Wait is the only reliable options. The tradable areas are either below or above, and they're both futures gaps. So these makes them dangerous areas, because we could get down there and fill the gaps or just rebounce out of the gaps. All right? So remember that if we go 700, the signals can be the gap rejects the prices, or the prices get in here and fill the gap. All right, so be really cautious with that. Remember that the gap in here closes at 11,800, and this gap in here closes at 10,900. So think about it. All right, if we get to 11,700 and if we push up to 800, don't be surprised. We're just filling this gap. If we get in here, remember that there is a gap at 1160, and if we break below it, we can go down to 11,800 without a problem. All right? So in this area, like I said, it's going to be riskier because of the gap, whatever. So do take 1 hour signals in there instead of 15-minute ones if you want to buy. That's it for today. Don't forget that as you get to trigger your trades, you must risk manage according to the PDF manual, which means if you take the 15-minute signal in here, you risk manage at the trend channel, and you profit take anytime you have a signal below the previous low and below the support context. If you do want to buy, then you're in a bearish range, which means you need this range to be mature. You can aggressive buy this signal if you're an experienced trader, otherwise you wait for an accumulation system out of the mature range. So you kind of let it go with the market until it makes its final excess on this structure. You wait for a bullish signal in here, and you wait for the market to accumulate in there, like pulling back towards the trend channel. So what you want is the market to do resistant context, trend channel, resistant context, breakout. And that is the kind of trade you can take. If you're a bull, this is where you want to get in. All right, experienced trader will try to support the accumulation, but that's all you want to be doing. Experienced traders will do this. They will take all three of those trades. Beginners only take this one. A little bit more experienced can take this one. Professionals and very experienced will take all those three. On a bullish perspective, obviously, and on a bearish perspective, you wait for this area, you see if the market reacts bearishly on the gaps or if it fills the gap before selling, you take your selling entry, you risk managing here, you profit take there. End of story. Simple as that. I wish you guys a good trading day. I hope you understand, or at least that you've been learning a little bit of interesting stuff today. Trade safe. Remember that we're summer trading on the US indices, so trade smart. Even though we have volatility, that doesn't mean you need to be really aggressive. We do trade with low volumes anyway. Bye, guys.